Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the bullish scenario where your low is in and we are looking for a contracting leading diagonal towards the upside where all of the waves are three-wave structures. In this wave 2, we're then counting a zigzag to the downside in a wave A, B and a wave C, where preferably your wave C is already finished, as we can count a nice 5-wave move towards the downside, but also this wave C extended to the 3 trend-based sub-extension taken from the high to the low of A to the high of wave B, which is a very uncommon target for a wave C. It's very extended, so preferably, therefore also, your low is already in. Now, what does give some probabilities to this scenario is the 886 touch here. The 886 has been touched with the first high here, taken from the high to the low of this wave A, and the 886 is a very rare target for a wave 2, but common for a wave B or a wave X, increasing the probabilities that any move that comes after is a wave C or a wave Y, and in this case, it is then a wave C. Now then we are looking for price to move towards the upside. So we want to see impulsive structures and zigzag structures to the upside because we want to take the high of this wave 1. If we look at the resistance areas to the upside, then we have this blue box here, 65.4k to 65.8k, and then the second blue box here, 68.2k to 69.2k. On the 15-minute, if that is the low of your wave C, we are looking for continuation to the upside as mentioned, where we can count a nice impulsive move to the upside. In the bullish scenario counted as a wave A, then we're looking for B and continuation to the upside in a wave C. The common target area for your wave B is the 05 to the 886, taken from the low to the high of this wave A, giving you a target area between a 64k and a 63k, and in this area we want to see some proof of support, whatever that is for you, of course. Can be bullish CVD divergences, market structure changes, certain candlestick figures, MACD, RSI, it doesn't matter, but whatever gives you the confidence to look towards the upside. Zooming out, the bearish scenario is a sideways double combo WXY proposed by Stuba and Cat. You then have a running flat in wave W, double zigzag in wave X, and a simple zigzag in a wave Y to the downside, where your common target for wave Y is between the 1 and the 1.236 here, taken from the start to the end of W to the high of wave X, giving you a target area between 58k and 55.8k. Extension target is the 1.618 at 52.2k. Now in this particular scenario, we then have a finished wave A, potentially finished B, and a wave C towards the downside. So we want to see a 5-wave structure, preferably ending somewhere between the 1 and the 1.618 fib time, taken from the start to the low of W and put on top of X to compare wave W with wave Y. And the common target area for wave Y time-wise compared to W is between the 1 and the 1.618. Of course, can be a bit shorter, can be a bit longer, but that is the most common target area. Currently, I put the invalidation on top of the high over here. Of course, this wave B can be a little bit longer, right? Can be a bigger 3-wave structure, but ideally at the moment this would be the high, and this is a beginning of an impulse to the downside in a wave 1, 2, and eventually a wave 3 for lower prices. The bearish scenario is that this move towards the upside is counted as a wave C in a flat structure, 3-wave A, 3-wave B, and then a 5-wave C to the upside. However, what lowers the probabilities a bit for this scenario compared to the bullish scenario is that wave B hit the 1.618 taken from the low to the high of A, which is an uncommon target for a wave B. Now after this wave C, we are then looking for impulsive structures to the downside, where we have a wave 1 looking for 2 and eventually a bigger 3 to the downside to take this low. Now we do have some support to the downside still, which price actually didn't touch, which is the blue box here, 62.2k to 62.6k. Look at these CVD divergences. We have both bullish and bearish CVD divergences locally. Bullish CVD over here where the target is this high, and even more locally here bearish CVD divergences where the target is this low. So it's a bit of a mix. Always good to be patient, see what price is going to do. Now we do have some news. Friday, April 26th, 2:30 p.m. Central European time, we might have some increased volatility, so make sure you trade safe around this hour. And if we then look at the probabilities of the different scenarios, then on the 1 hour time frame, mainly focused on the structure over here, it's a bit of a neutral playing field as we are continuing to observe what happens very locally. But what would support the bullish scenario is that price touched the 886 over here, increasing the probabilities for an ABC to the downside. And also the current wave 4 is shorter in time than 2. So if we count an impulse in a 1, 2, 3, 4, 5, and this is the low of your impulse, your wave 4 here is actually shorter than your wave 2, which is less common. It's most common for a wave 4 to be longer in time than a wave 2. So therefore, preferably for the bearish scenario, you actually like to take this low over here. But for the bullish scenario in an ABC, preferably you don't take the low over here. Now, what supports the bearish scenario is that the second leg towards the downside here went to the 3 extension, which is very far for a wave C. And as mentioned, taking the low over here wouldn't be ideal. What gives a little bit of probabilities to the bullish scenario, however, is if price can move towards the upside and hit the 0.618 that you then take from this high over here to this low, which is sitting at 65.8k. So that is an interesting level. If we can hit that level before taking the low, it does give some extra probabilities to the bullish scenario. Now on the 50-minute time frame, only focusing on the structure over here, the probabilities are higher from an Elliott Wave point of view for the bullish scenario to take the high before the low. And that is simply because if we do look at the flat structure here, wave B went to the 1.618, and that is an uncommon target for wave B. So naturally, therefore, probabilities are a bit higher for the bullish scenario. However, also something I don't really like to see is that price move towards the upside without hitting the golden pocket. And if we take a Fibonacci from the low over here to the high, right, and I toggle on the golden pocket over here, you can see that actually price just missed out on hitting that golden pocket, and it is quite uncommon to leave the golden pocket hanging like this and moving to the upside just above touching that 618, right? So that is something to at least keep in mind for the future. Now, if price does move down, I'll be looking for proof of support, as that golden pocket is one of the confluences in that support area that I mentioned. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.